Hello everyone, it's me again, Sam Wong from Finance and Analytics Services team. I haven't been really recommended stock to do a singulated video for quite some time, and I think it was a good opportunity to reinstate one of my favorite stock, which I knew that the valuation at one point was $354.82 at the highest, and because of the Chinese delisting pressure, because of the intense relationship between China and U.S., the market has really heavy selling for the stock to drive it up as low as around $140. Wasn't really long ago, and now we bounce back from that low points to $170 as of Friday. Again, I would like to really look at one of these points and trying to look from a technical perspective, not necessarily just fundamental, but I will get through the details why this stock is a good buy, especially for long term. So again, bear in mind, the definition of long term is 5 years. Anything less than that is considered short term. You can argue it's a midterm if it's in between 2 to 5 years. It depends how you look at it. Some people really doing short trade when they're saying that they are really short, like within a week or two, right? Otherwise, you would call that day trade. So I'm not really encouraging a day trade, but my rule of thumb is 20% return. So regardless of short term, maybe a week, a month, or within a quarters, if you're given 20% return, then if you're a short-term investor, then you should capitalize and take the gain and walk. And then my favorite terms always have been don't look back. So once you're selling it, do not regret the decision, because sometimes you could sell a stock, like for example Tesla. Well, if you have bought it 400, sell 700, you think a really good deal. But now it's like, before Elon Musk started selling it, it hit up at the $1,200. So you say you must sell a lot. And somebody like the auntie say, hey, Tesla will be go up to $3,000 a share. Whether you believe it or not, and when it happen is question, but it may happen a few years from now. So what I like about these videos sometimes is I will take a look back, and like other people, I will take a look back and really say, hey, you know what, I think I messed up on this one. Yeah, this one really is, you lose money over my advice. But a lot of time though, I think it's, if I can do 80-20, that's actually pretty good, right? I would like to strike to 90-10. So what it means is, if the 10 stock I recommend, 9 of them were making money, 1 of them having potential really at a loss, right? And 80-20 mean a stock is actually rising, but 2 stock actually at a loss. So I'm pretty much hitting that that kind of range. You also have to bear in mind too is timing. So if you're short term, even long term, the intraday, the period of time, which I'm taking the low and the high telling you, but you may not necessarily be able to buy the low end non-seller at the highest price. Therefore, some people could still say, even if I show the graph and the fact that you should have made money, some people actually still lost money during the period of time when the stock showing rising. Okay, just bear that in mind. And this is another perspective too, is you always want to look at multiple period of time. So in this case, the one I show you your 5 years timeline, so you get an idea how the stock was performing, and really is underperforming in 2021 for Bidu, because you look at it before pandemic was 2019 December that happened, right? It almost have been about 2 years now with starting of the pandemic. And then if you remember the timeline in March, it actually get very serious. It's really bad, and the market actually crashed 2,000 points in Dow Jones in one day. That's where U.S. decided to have rescue plan, and also the massive layoff following that month in April. U.S. actually have an unemployment rate hitting 20 million of people at the highest at one point. So the market actually wasn't doing well. A lot of stock were getting hammered, and then with the rescue, start to be actually having rebound, and some stock even have a multiples of return if you compare to the start of the pandemic to now. And so if you look at Bidu again, 2018, if you take a look at it, or 2019, 2018, it's actually over $200. That means, with the balance sheet, because the companies that were making money over this few years and have profitability as well, definitely the balance sheet should be actually now at this point much stronger than when you look back 2017-18. But the valuation at that point is already over $200 for Baidu. Um, so in a year range, you also can see in that is last year, in this year of March, which a lot of stock, if you look at perspective to pick another one, I wouldn't pick Tesla, but just pick some other high tech stock, or in the period of time where or maybe one of the stock in Dow Jones, you will see that in March, actually a lot of stock will pick up, like March and between beginning of March till probably second week of April, because in April it starts to slide again. But that period, if really you see it, the Baidu and Pinduoduo too. You can look at Pinduoduo and Bilibili. They were in a very high horizon and up to that peak point before you start to have a selling pressure. So in that year, you give you why it is, and if you take a 50% discount of the stock, well, literally will be $175. So now it's not even a range of that. And even if you think a week ago, because this week the market have actually given a return about 10% for Baidu, it's actually hitting even lower than that. Last week, if you listen to my video, separate video, I said, Chinese stock will want to be coming back strong and good to buy. So you have already profit 10%. So then the other perspective, another landscape, right? Again, you have to look at different timeline perspective. 6 months, Baidu unfortunately was at a 5% loss, but if you consider 5% wasn't very serious and severe. And again, the explanation of that timeline is that there's intense relationship between China and U.S. and basically pressure selling Chinese delisting. So selling this Chinese stock is very high pressure from a lot of funds. And then at one point, Walmart actually come back and say, hey, stock were oversold. We actually, as a EFT, would like to buy some Chinese stock back into our portfolio. So and then 1 month perspective as well, you give you that, they have up and down, at this point it's kind of the low end, and then it actually, do pretty well to rebound back. So if you look at the technical perspective, looking at 50 days average line, it really, kind of break it through and potentially with going up. And also with the news of like November 16, Chairman JCP and U.S. President Biden will have a conversation. So then you will be looked forward as one of the most important meetings and breakthrough. So I really thinking that market will have a positive commentary and reaction about that. Of course, there are a lot of work still need to be done to make the relationship, but as long as you kind of in a collaborative manner, things should be getting better. So then, and I heard news recently like this one, that there actually articles supporting and recommending by Baidu, and then in the Asia fund, there was a Bloomberg interview with one of the fund manager. He basically looking at Chinese stock very strong, saying in the long term it will be one of the best long term investments. So even at this moment, maybe really kind of a little bit not doing so well and being pressure from the high point and have really kind of sell off. A lot of these you already 60% discounted from the highest point, but if you're looking forward to double 11, then double 12, and then you look at in the Chinese New Year following year, with the Olympics, Winter Olympics, assuming going well in Beijing, so then things will actually to be positive. And here's some of the reasons why we should buy Baidu. Okay, Baidu stock is down 24% so far this year. Actually, less than that now because it's a little older. A week before, the market was using $165 valuation for their comments. And Baidu has known as the internet services, a leading search engine in China, but now the management has shifted the focus to artificial intelligence autonomous driving. Again, they also have investment with the EV electronic vehicle cars as well. I mean, what I mean by that is they don't invent trying to focus and do any benefit or revenue from there, but they actually put money into few some of these potential EV company and invest there, and they own their stock and shares as well. And then invest in Chinese technology, Baidu. Actually, like I said, raw food, the 52 range is pretty wide range, 130 to 355. But if you add them together, take a half, right, divide by two, you literally you're saying that that it's around at $240 range, which is pretty much when Baidu were running the IPO in Hong Kong, the first it was $250. So a lot of people I know still losing money, kind of get disappointed, upset about it. But again, if not for speculative purposes, for the long term perspective, Baidu, really I see it will be coming back to $300 more a share. But I can't tell you when and how long you have to hold it. But long term mean 5 years. But I don't think it will take 5 years that much time period to get that recover from this point to a high point 352 again. And also, Baidu dominant the Chinese engine market with 76% market share. But again, the pie is in China is 76, but in the world is really small, just 2% of pie. Mostly Google is well-known worldwide engine. Part of it is also the way how things um, were done in the practice in China. And in recent years, however, the shift to AI technology, which that artificial intelligence will be the future. An example will be handling some dangerous job. Amazon already invest a lot in AI as well, thinking, hey, the machine can do all this lifting and shifting and moving stuff into the manufacturing plant. So similar applications or more, even in extension of that from a Baidu perspective. And Baidu result on the second quarter on August were doing pretty well. Their revenue increased by 27% compared to previous year. Again, it's all because of cloud product. Cloud is very powerful. If you look at the Microsoft, the reason why recent surge from $300 to $330, and the earnings announcement basically saying most of the revenue will come from cloud, and that will be the future. So I think that Baidu is very smart to develop that too. For the future revenue stream, but so far it's still advertisement is one of those that the hidden Baidu profitability, and again they have dropped it to 137 and now it's 170, but we look forward to getting that. And among the 37 analysts, of course, there more than that, but in this study that I found is 37 analysts, the share have a median price of $253, which ranges from really 153.65, which I mean, if you look at last week's 165, 153 is almost at the bottom, and the high end is 357. And one of the things very attractive of Baidu when compared to Google is that the P ratio is 8.14. The lower it is, the better it is. That's the price per earning. So you're taking the current price of the stock divided by how much earnings there per year. That's a come up with a ratio. So 8.14x is really, really good. When they say high tech is overvalued, normally the P ratio can go up to like 300. And Google is at 28.68, and then a price per share sales PS is also 3 versus 8, which means pretty good ratio, and PB is 12.32 compared to 8.09. So again, the P ratio is really what what is attractive from make Baidu more comparatively speaking to Google in particular. So all of these reasons again sum up that the prices from a comparison perspective, they are actually at even lower at 2017. These year they still have revenue profitability, meaning that the balance sheet should grow bigger. So the valuation meaning that they are not necessarily, they are actually kind of underperform right now, but potential undervalue. Second piece is they focus on the future, which is the cloud products, which we know that this become more and more general common practice. People put things in the cloud, especially companies, so then they can share and just make sure to make it even more secure. The third piece is um, their PE ratio is lower than Google, which makes them more attractive. The fourth piece is there will be a meeting between China president, and also U.S. president. So this will be probably make the relationship less intense. Thus, you will regain confidence about Chinese investment and the growth, and also the buying their stocks. Hope you like this video. If you have any questions, feel free to send me an email. Give me a like. Thank you.